Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, I'm going to get right to it. Supply 6,445. Looks like it's still ticking down. Show me that chart.
It is still ticking down, no, almost 2% from last week. But, as I started talking about on Monday with our Brooklyn report, I'd like to focus on the year over year here. So year over year, compared to where we were on supply from this point last year, we're down 30%. So even though we've had a pretty busy active season, that supply number is still down by almost a third.
Yeah, I feel like every time it tries to go up, and we had a heavy listing season, John, and it didn't push this thing up that much. I mean, we bounced up a little bit. It was notable. I thought it would go higher. I thought we'd at least hit the sevens, and we didn't. We hit a wall. We're coming right down. I guess we'll monitor it and see what's going on. Let's move on to demand. Pending sales 4344. That looks like it's turning around and reversing course. Show me that chart.
It is. That's the first uptick. It's up about 1% from last week, and that's the first uptick we've seen in the pending sales number really since mid-July. And on a year-over-year basis, again, this number is 80+% higher than it was at this point last year.
I mean, so let's just try to summarize this for a second here. We got supply that is turning the corner and going down. We got pending sales that is turning the corner and starting to go up just a little bit. Yet I'm looking at this market pulse. It remains in the mid to upper sixes. We were significantly higher months ago. This market has reset. It has changed. And I'm wondering, is this going to now turn around and go up, John? That's what I'm wondering, because if supply is going down and pending sales is now starting to turn around, that's the kind of stuff that impacts market pulse. But we'll keep an eye on it for you. Let's go to the weeklies, John, and see if there's any clues there. I'm looking at supply, 345 things coming down. Ooh, that's down a lot. John, show me that chart.
Yeah, you're right, down 16%. But the thing is, Noah, if you look at this on that year over year basis, we're actually up in terms of supply, the amount of stuff coming on a weekly basis. So this, just to reiterate the point that this has been a somewhat heavy listing season, because we're still up on a weekly basis. That's 44% more than we were seeing this time last year.
It's a heavy listing season. I will grant you that. But this number was in the mid 500s a number of weeks ago. It was in the high 400s, then mid 400s, and this is quickly dropping, John. And I can't help but notice, I mean, we'll get to this in a little bit, can't help but notice that the net deficit of things going off versus things coming on is widening right now, but I guess we'll see what happens. That's why supply is going down. Anyway, let's move on to contract signed 333. I feel like I got the lucky sevens. I don't know what I win, but Johnny, show me that chart.
Yeah, so 333, but let's just first of all do you remember what the weekly new active number was? What, 345? So we're really 12 different. There's only 12 more actives that came on last week than the number that went into contract. So then you add in how many went off market, and you're back in pretty steep deficit territory. And just to continue that year over year comparison, this is 44% more than we saw this time last year in terms of the weekly contract signed. So this market really looks like it has gained some steam in the last couple of weeks here.
Yeah, it does. It does. It looks like the supply situation is changing to the downside. It looks like the deal volume is on the upside and holding. I mean, that is a good number. And again, I have to wonder when this is going to make a move. I don't know. I would expect it to go up right now. If I'm a buyer out there, I'm seeing less stuff and more deal volume. I would think that pulse is going to start to go against me, but we'll keep an eye on it, John. Okay, Johnny, let's go over to the chart du jour. This is a very interesting one. It might be a little confusing to begin with, but let me just try to break down for you all what we're looking at here. Okay. First off, the blues are going to be your co-ops. The greens are going to be your condos, okay? And we got a line and we got a bar, okay? We got the blue line. Let's look at the blue line here. This blue line is going to be contract activity of the co-ops on that left axis, okay? Number of contracts. And that blue square, that blue column is going to be dollar volume for that. So what we're trying to do is we're trying to track money flow, right, Johnny? Money flow. And it looks like you broke it down from the low end, under $1 million, and then you got 1 to 2 million over here. You got 2 to 4 million over here, and you got over 4 million over here. And there's a couple of really interesting things going on here. And I just want to point out 1 or 2 of them, John, before I hand the mic over to you. It looks like everything has taken a nice reset down from the summer peaks. Like, it's pretty clear. You can see what's going on here, that everything's kind of down, down, down. Everything's kind of down, except the luxury $4 million condo market, and the $2 to $4 million co-op market, which has kind of rebounded a little stronger than the rest of them.
Yeah.
What do you think, John?
No, I think that's a very interesting point, and it's one that I think Donna Olshan has been making, which is that, you know, in the luxury sector, it's the condos that have really been recovering a lot faster, and the co-ops have been struggling. So, you know, if there's any struggle in the co-op sector whatsoever, it really is in that over 4 million sector. Because if you look at the other ones, I mean, yes, they're all off the peak, but you know, that bounce from September into October has been, you know, pretty obvious in the under million, 1 to 2, and the 2 to 4 section. And it's only once you get over 4 that those co-ops start to be, you know, a little bit sluggish. Now, if you'll allow me a flight of fancy as to toss a reason why, you know, I would say that, you know, you look at that over 4 million and where's the action, and the action's in the condo section. So that's like the luxury condos. You got a high floor, you're near the high line, right? I mean, it's Manhattan at its finest, so to speak. And then you look at that, the recovery of the $2 to $4 million co-ops, to me, that's like, all right, well, I can't have that condo, so I'm going to go for the next best thing. This is like the attainable luxury sector. So you're still getting a lot of space for your money. You got to put up with a lot of stuff in order to get that co-op. But, you know, on balance, if you can't go ahead and if you can't make that purchase at over 4 million on the co-op sector, the condo sector, then the $2 to $4 million co-op sector actually looks pretty good.
That is an interesting thesis, John. I mean, that very well could be at play here. I mean, we're following the data, and this is where the money flow is going. So I hope that you guys have a visual representation about what's going on in what sector, in case you got buyers or sellers in that sector. You know, when I see this 4 million luxury condo, I got to wonder to myself, is it new development? So, you know, I did take the luxury of pulling up our contract activity for new developments right here. Okay. And granted, you know, this is only as good as the data that the sponsors share with the Revenue RLS system. So this is not a full picture at all. I want to bring that out. However, what I do see here is we are producing at a very good level. You know, the resale market has come down. Like, we all know that. We're bouncing from September lows, but we have come down from the record highs over the spring and summer. And when I look at what's going on in new development, I mean, we're supposed to bring in 118 deals. We're bringing in over 200, and the trend is rising. So there are a lot of new development deals being marked. I'll say marked as contracts signed in the system. We don't know when those contracts were signed. It could have been in the last few weeks. It could have been in the last few months. That's the nature of new development. But nonetheless, it looks like that luxury condo sector in new dev is finally coming back to life a little bit.
Yeah, that's an excellent point, Noah.
Yeah, cool. John, thank you so much for whipping up all this data. It's not an easy topic to discuss, but hopefully we visualize it for you so you can see it. That is Johnny Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, guys, if you got questions, we got answers. Just visit our forum over here. And if you guys want to access any of the charts from today, just click on the links over here. You can access those reports. Until then, this has been your weekly Manhattan market update. We will catch you next time.